This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. My name is Mike Maroney, and today is Monday, March 13th. Welcome to the Monex Monday Preview. If you look ahead this week, we have a lot to talk about. We are on the brink of a major change as far as the most accommodative monetary policy in U.S. history. And what will that do to the price of assets? Let's talk about the three major sectors. One, real estate. If interest rates are going up, then payments will also be going up. And if you think about where real estate sits right now, we are retesting and actually making new all-time highs. Will the increase in interest rates change things? Many people believe it could. As interest rates go up, so does your payment, and that means price usually has to come down. Now, what's happening in the stock market? Well, over the last 5 to 6 years, we've seen a tremendous move up in both the S&P and the Dow. The S&P in the financial crisis pulled back to a spooky low of 666 and has now recently hit a high of 2,400. And the Dow Jones went as low as 7,000, and we recently hit a high of 21,200. So what we're looking at there is the Dow basically tripled and the S&P almost quadrupled. But will this new shift in monetary policy change the way people look at the price levels of the stock market? And will we start to see asset rotation as people look for undervalued assets within all three of the sectors as a way to protect their capital? So many people think taking a little off the table right now in the stock market makes a lot of sense. Now, the third sector that is typically affected is the commodity sector. So let's look at what's happened in commodities over the last few weeks. Oil, which was trading at $58.50 in the beginning of this year, traded as low as $48.50. So we saw a $10 per barrel drop in the price of oil. The CRB broke the 50-day moving average after trading as high as 196. We saw an approximate 9% drop as the CRB tested the 180 support level. Copper dropped 6 or 7% in the last 2 weeks. So what we're seeing in front of this rate increase, which is expected to be the first of a minimum of 3 this year, is general selling across the board. And I think a lot of people are waiting to see which asset will find its bottom quickest and where will the money flow. In the precious metals market, gold was as high as $1,265 last week. We saw a sell-off all the way back below 1,200 for a very short period of time, and we've popped right back above that magical 1,200 support resistance level, and currently we're trading right around 1,202. Silver was trading as high as 1848, and we tracked all the way down to 1685, which just so happens to be the 61.8% Fibonacci retracement support zone. Now the question is, will we be able to hold that support zone and inevitably go up and break through that 1850 high? Or will silver have to break below and potentially find a new bottom? Obviously, many people look at the 1580 low, which was hit in December, and they're hopeful that that will be a final bottom as far as silver is concerned in 2017. So what do we have to look forward to? This week, we also have the Netherlands having a general election, which most people believe is a litmus test as far as populism is concerned in Europe. We've already seen Brexit. There's rumor of Frexit, and obviously this week's election in the Netherlands may give us a leading indicator as far as what sits out on the horizon. A matter of fact, last week, Bank of America / Merrill Lynch came out with their projection as far as gold was concerned, and they felt very confident that this 1195, 1200 support zone would hold, and also they were looking for somewhere between $1,350 to $1,400 gold by the end of 2017. And the reasoning was that they felt that the situation in Europe was very volatile, and obviously the results of these elections could tell the tale as far as what could happen with the euro. And because of the massive amount of sovereign debt and the risk that's associated with that, many people believe that people will be looking for gold as a way to protect themselves, classify it as a safe haven as we move through 2017 and see how this political situation over in Europe will shake out. Then, of course, we have what's happening here in the United States. Will Mr. Trump be able to get that $1 trillion infrastructure bill passed? Will we start to see more inflation build into the market? Will we have a stable political situation? So we certainly have a lot of things cooking. We've had a nice little pullback across the board as far as just about all the different asset classes are concerned. Many people believe that the precious metals will be the shining star in 2017 as the general population continues to lose faith in the fact that government has the debt and the overall situation in control. And as that happens, obviously more and more safe haven money will continue to move into precious metals. The last thing I want to talk a little bit about today is the debt situation, and I'm going to steal some of Bill Gross's thunder because he used this on his report for Janus. He was talking about the debt load that exists here in the U.S., which currently sits at $65 trillion, which is basically 3.5 times GDP. And he talks about the fact that how are we going to be able to support that debt load if we don't see growth? And growth rates of 1.5 to 2% will not pull us out and be able to allow us to service that debt. How are we going to fix that? Obviously, many people think we're going to monetize, continue to print more money, and basically allow inflation to prop its ugly head. Once we let that genie out of the bottle, that could be the ultimate catalyst as far as gold and silver are concerned. And China, their debt level in the last 10 years has gone from 24 trillion all the way to $48 trillion. That's an increase of $24 trillion in the last 10 years, which now puts their debt load at 3 times GDP. How are they going to be able to service that debt with the amount of growth that's expected? So we've got a lot of things cooking, and the announcement on Wednesday by the Fed may just be the first of many things that sit out on the horizon that should cause you to think now is a great time to own precious metals, it's a great time to own gold, and it's a great time to give us a call here at Monex. Thank you very much and hope to hear from you soon.